We know there are many choices in internet radio, and the staff and host of LA Talk Live would like to thank you for choosing the internet's hottest destination for the most eclectic sound and invigorating talk. This is LA Talk Live. We are more than just talk.
The Dialogue, the community voice of Southern California's young professional network. Relevant discussions about the thoughts, concerns, opportunities, and challenges faced by today's generational leaders. Real talk, real people. This is The Dialogue. The Dialogue with Starlett Quarles on LA Talk Live and streaming live at www.latalklive.com.
Good evening, ladies and gentlemen. Welcome once again to The Dialogue, Real Talk, Real People. We're on live at latalklive.com and streaming live in Omaha, Nebraska at 1690 AM. The one, the voice of the voiceless. As always, The Dialogue is the voice of our generation. So thank you so much for joining us here every Wednesday from 5 to 6, where we like to discuss the topics that are relevant to today's generational leaders. We are finally at the last episode of our Women's History Special, Black Women and the 4 Dimensions of Ownership, with our special co-host for the month, Miss Shalon Douglas. How you doing, lady? Welcome back of Shalon Douglas, Unlimited Turnkey the Professionals. All month long, we've had Shalon spotlighting her ownership circle model of ownership, self-purpose, business, finances, and today our show is going to be on real property, her final principle, real property. If you missed any of her series this month on our show, please check out our replays on thedialoguela.com, or you can always check us on our Facebook. Now, as I said, this is our last show of Shalon's wonderful series on ownership. Next month, we're going to start a new series on the Black Agenda Part 2 in anticipation of the upcoming 2013 mayoral election between Councilman Eric Garcetti and LA City Controller Wendy Gruhl. If you have not registered for our event on May 11th, A Dialogue with Black LA, please check out our website at dwbla.com and make sure you register. We're filling up. We've now partnered with West LA College. So if you have not reserved your seat, please do so at our website, dwbla.com. Tonight, as I said, we're going to be focusing on Shalon's last principle, Black women and the ownership of real property. So we're talking about real estate investment today and reverse mortgages as a legacy strategy on The Dialogue. Our special guests include, of course, Shalon Douglas as our co-host, broker Adrian Bates with Keller Williams Realty in Marina Del Rey, and reverse mortgage specialist Tanya Matthews of New Biz Energy. So if you are interested in being a part of this conversation, please give us a call on the second half of our show at 323-247-7443. Again, that's 323-247-7443. We're going to open up the phone lines after the second half of our show because we want to hear from our guests today on real property. You can always send your comments or your questions to our Facebook page at facebook.com/thedialoguela or tweet me at StarQuar. Today's show is brought to you by UrbanX Marketing and our media partners at The Wave Newspapers. So make sure you check out The Wave at wavenewspapers.com. We're going to take a quick commercial break, and when we come back, we're going to get into our conversation on Shalon's ownership circle model and focusing on real property. Right here with me, Starlett Quarles on The Dialogue. We'll be right back.
Young Connection, your one-stop connection for all your graphic design and commercial printing needs. Young Connection is a full-service printing and media design company dedicated to providing the highest level of customer service and satisfaction. Young Connection provides swift response and rapid turnaround services for banners, brochures, business cards, letterheads, church bulletins, funeral programs, flyers, logo design, posters, and much, much more, all at an affordable price. Young Connection, the official printing company of LA Talk Live. Give them a call at 310-491-3336. That's 310-491-3336, or visit their website at www.youngconnection.com. That's www.youngconnection.com. Young Connection Printing and Media Services, proud sponsors of LA Talk Live, where it's more than just talk.
Do you have or know of someone with a child or adult family member with developmental disabilities that would benefit from a social recreation program in the South Los Angeles area? At Ability First's Harry A. Meyer Center at 8090 Crenshaw Boulevard in Inglewood, we offer afternoon and after-school care programs for children and adults with disabilities, which include socialization, recreation, community outings, independent living skill training, as well as physical fitness activities. You can reach us at 323-753-3101 and visit us at www.abilityfirst.org.
It's ladies' night, and girl, the feeling's good. Oh yes, it's ladies' night, and the feeling's right. Oh yes, it's ladies' night. Oh what a night. Oh what a night.
Welcome back to the dialogue. It is Ladies' Night tonight. Matter of fact, it is Women's History Month, and we are concluding Women's History Month celebrating the ownership circle model of Miss Shalon Douglas of Shalon Douglas Unlimited and Turnkey the Professionals. Where you come up with that name, Turnkey the Professionals?
You said where?
How'd you come up with that name?
I can't remember. It's been so long.
Well, welcome back, lady. How you doing?
Hey, I'm doing wonderful. Thank you.
I'm sorry we missed each other last week, but we played a wonderful replay on Self-Purpose. If you did not catch that, you got to catch that show on ownership of Self-Purpose. So how you doing, sweetie?
I'm doing wonderful. Thank you for having me back again.
Oh, no, we're excited about your model. We're going to touch a little bit on the ownership of finances, since we didn't really get into that much last week. So why don't you tell us the importance of financing in your ownership circle model?
Well, number one, because the ownership circle model is basically focusing on the individual who is a business owner. So one of the elements that plays a key factor is ownership of your finances. Right. So once you do start your business, or once you have that clear mindset as to what you want to do, how you're going to get there, and number one important thing is, what's the purpose of your business, then you can get started on that strategy. And then once you get started on that strategy, the effective part of that strategy is to start making income. And so when you make that income, what are you going to do next with your finances? Right. Where are you going to park the income that you're making into different vehicles to where those finances can be leveraged? And then from there, and this what's actually today's show kind of entails between real estate and finances. Absolutely. So it's definitely very, very important, because once you make that money, what are you going to do? You don't necessarily want to put all your money back into, this may sound crazy to a lot of people out there, but you don't want to put all your money back into just the one vehicle, which is your business. You want to be able to leverage your
multiple
finances.
Streams of income,
Most
girl.
Definitely.
That's how wealth is truly created, through multiple streams of income. So what's the difference between real property and an estate?
A lot of people are confused that when they hear the word estate, they think that that's automatically just real estate, but really an estate is your entire portfolio. It's inclusive of everything that you own, whether it be liquid assets or, property or anything of that matter. So anything that you own, to where if you were to, unfortunately, we all have an exit date. So when that time comes, you want to make sure that your entire estate is protected, and that includes real estate within that.
Okay, excellent. Well, let's bring on our guest to get into our conversation on real property. Yes. We have broker Adrienne Bates with Keller Williams Realty. How you doing? Thank you for joining us.
Thank you very much.
And you're out of the Marina Del Rey office, correct?
Yes, I am.
And shout out to Joe Soros and Linda and Sherry, everybody at Keller Williams Realty.
That's right.
Well, welcome to the dialogue. Thank you for joining us.
Thank you.
And reverse mortgage specialist, Ms. Tanya Matthews of New Biz Energy. How you doing?
I'm great, and thank you for having me.
Thank you for joining us. Thank you so much, ladies, for helping helping us with this conversation and kind of finalizing Shalon's series on her ownership circle model, talking about real property. So let's talk about legacy building, especially through real estate in the down economy. How can we still build real estate in this down economy? I mean, legacy, create legacy through real estate in today's economy.
Buy now.
Now's a good time to buy. What if your credit's all jacked up?
Well, there you can partner up with someone, or they have agencies where you can clean your credit up real quickly, and you could still buy. Or there's still people who have equity and might even do equity share, meaning that, okay, your credit is bad, but maybe you have 10, 20, or $50,000. Maybe you could put a nice down payment, and the seller will hold some paper, meaning that they would act as the bank. So that's an alternative way of financing a purchase. But with the interest rate at 3.5%, and prices they're down tremendously, it is now the best time you could ever buy. I mean, I remember when I first started buying property at the young age of 23, I would put together $5,000, $10,000 real quick, meaning that I wouldn't go out to eat, but I was on a mission. I had a plan. My plan was to be financially secure by the time I was 30.
So who exposed you to real estate at such an early age?
My mother and father always said, own your own. If you're going to rent, pay your rent on time, but start having a plan. You save some, spend some. You got to put 10% for, the father, and 10% for you. So you always have to pay yourself first. So you can amass that amount of wealth by owning what you live in. And so if you're single, what I would recommend is that you buy 2 to 4 units and then have someone help you pay the mortgage.
That's right.
Don't buy a house until you get married and have a family. I mean, I've always owned 2 units, 4 units, 8 units, always units, because that affords your lifestyle. That pays for that car note. That pays for you to go back to school. So you can buy a duplex and have someone help you pay the mortgage.
Excellent.
But always save your money, save some, spend some, and pay yourself first.
Excellent. Tanya.
Well, working in the reverse mortgage business, one of the strategies that you can use to purchase property is to do a reverse mortgage. With the proceeds, you may walk away. For example, I'm working with a client right now. They are eligible for after we pay off their mortgage, that is, they're eligible for $45,000. They can then take that $45,000, roll that into a down payment, or come in with someone else, which has been stated, and purchase property for the family or for the kids. And it's just really a great way to own one home and then purchase another.
So we're going to get a lot more into detail about reverse mortgages for our viewers who don't really understand the process. Shalon.
As far as real estate, I purchased my first piece of property at 19 years old.
Really?
And
Now, who exposed you to your mother too? I mean, how did you?
No.
At 19, girl, I was getting some clothes, going to the Cooper building. I mean, I wasn't even thinking about real estate. Remember Cooper building?
That's a long time ago. No, but in actuality, I was surrounded by great people who were already in real estate. I was around people who were much older than I was. So one day, a friend of mine had actually said, Shalon, have you ever thought about getting into real estate? And I was thinking to myself, no, but can you tell me a little bit more about it? And so they kind of showed me the ropes. They told me some things of what I could do and how to get started. And I actually had someone that was willing to put up the money for me to actually get the property. And then once acquiring the property, after a little while, I was able to take out a second on that property and be able to pay that person back with the interest that we had in our contract. Still had plenty enough money left over to fix that piece of property up, and then rented that property out to a tenant, to where now the tenant was inside of my property paying the mortgage. And, just from there, I kept doing the same thing. I repeated the same steps over and over again. So
if you're interested in being a real estate investor, that it's not such a good idea to be a broker or an agent. Is that true? I mean, what is your thoughts on being an agent and an investor?
No, not at all. What the Department of Real Estate says, that if you buy or invest in 7 properties in 1 year, then you need to be licensed. But no, I mean, anybody can buy. You can. I have clients now that own 15 pieces of property. Some are units, some are single families. No, I wouldn't say no.
Okay.
And see, that's a good strategy that's why it's so important as far as involving the business owner, because your business might just be real estate.
Right.
So what are you going to do to leverage, your business?
Okay. Adrian, tell us a little bit more about today's real estate trends. They appear to be, they appear to be rising. The values appear to be increasing. What's happening?
Hallelujah.
I know that's right.
Hallelujah. Well, what we've seen is that the banks are not foreclosing, which is a wonderful thing for home ownership, especially in our community. The second thing is that a lot of people who are out of work have decided to do a short sale, which is wonderful because they get relieved of the debt under the Mortgage Forgiveness Act. Now, if you are still working and your credit's good and you have a lot of people are taking money out of their 401ks and making it liquid in order to buy something tangible, which is real estate. And right now, real estate is on fire. It's called supply and demand. We don't have enough inventory. Interest rates are 3.5%. That house that was 600,000 is now 300. I mean, think about it. So if I buy a house for 200,000 at 3.5% interest rate, and I put down 20%, or either do it FHA, my payment is what, 900? So I'm paying less by owning my own place as opposed to renting. So
how long do you think it's going to be this good?
We don't know the day or the hour, but people procrastinate, and I'm telling you, now is the time to buy because you won't see these interest rates at 3.5%. Historically, Tanya, haven't they been anywhere since 1960, 6% to 8%?
This
So
is true.
I can't. 3.5% is just phenomenal.
It really is.
Not to interrupt you, but also to that rate on a 40-year
Oh, my
term
God.
versus 30.
Right,
Yes.
right.
So that means your payment is even lower than what you would get at such a great rate on a 30-year term.
Yes.
And I've been doing a lot of refis as well because you have a lot of people who thought the rate of 5% or 6% was really good.
Yes.
Right.
And it was. And now they're refinancing at 3.5. and-
We need to talk.
So who is buying now? Investors? Who's in the market?
You
And I
would
know
see a
investor
lot-
building a down economy, but who's buying?
A lot of first-time home buyers are buying and taking advantage of all the banks' first-time home buyer programs. You have a lot of investors that are buying, cleaning them up, and turning them what we call flip properties. And you have a lot of investors that say, okay, I'm taking my money out of my 401k. However, I'm going to buy and I'm going to hold. I'm going to buy, I'm going to rent it out, take advantage of the tax savings, and then in a couple years, I'll sell it or I'll still keep it. Or we have now a lot of investors, a lot of buyers. I have a client now. Him and his wife had a duplex. They've depreciated it all the way down. Now we're going to step up and buy 4 units or 6 or 8 units. And so what you do, you start off at maybe buying 2 to 4 units and then get that working good for you, and then step out on faith and go buy, 6, 8, 12. Then you can almost retire, huh, Shalon?
That's the whole purpose.
But multiple streams of income. There you go.
That's where I'm trying to be. So share this a little bit more about the banking climate. I mean,
Yes.
because, a lot of people in our community had suffered from the subprime mortgage crisis. So what is the banking climate now?
Excellent. We're not doing that anymore. Hallelujah. We used to say back in '04 and '06 and '08 that if you were breathing, we could give you a loan, which is true.
Yeah, that
okay?
was true.
But now we're back to our conventional ways, which are wonderful, where we're doing, 3.5%, 30-year fixed or 40-year fixed, which is wonderful. So they're not selling so many of those adjustable mortgages. Everybody is doing fixed, or in the higher price. If I buy a $2 million house, then I'm going to put 25% down, no more 100% financing. But I'm also maybe going to do a adjustable for 10 years, which is outstanding. That makes my payment very affordable. So banking right now, they get it. And they're trying to help the consumer, and they have a lot of programs. I've been going almost every other week to one of the big 5 banks to hear about their first-time home buyer programs and all that they have to offer. I mean, some of them have no MI, which is the mortgage
That's
insurance,
wonderful.
which is wonderful. And now some of them say, okay, well, no FHA because of the mortgage insurance premium. So now if you put 5% down, and it could be a gift from mom, dad, sister, brother, and that could help you buy too. So great time.
So, what are some non-traditional sources of capital and financing that today's investors can look to get into?
Well, like Tanya said, you've got the reverse mortgage, which is wonderful. Like mom and dad have equity, and they can take that equity out and help you buy your be a first-time home buyer. By the same token, you might have a seller that has equity, and they can be your bank. Or we have hard money, and hard money is not so hard anymore. Yeah, you know, Tanya, it used to be what, 15%?
It was really bad.
Oh, it was bad. It was bad. So now hard money was what, maybe 8-9%?
It's more around 8-9.
And no more,
maybe 10.
no more, 10 points now. It's more like 4 to 5.
gosh.
But
8 to 9%. Gosh.
Yeah, points are about 4 right now, 3 to 4.
which is excellent.
Yes.
So let's say I have $50,000. I go and buy this house. It's in bad shape. It might be a short sale. It might be a foreclosure. It might be a probate. And I've got 50 grand. Well, maybe it's only 150 in maybe a distressed area of Los Angeles or the surrounding counties. And I go ahead and get a hard money loan, meaning that you have to put up 35% of the down payment. However, what the hard money lenders are doing, they're lending you the money of the future value. So you pick it up for 150 and it's all in a mess, and you go ahead and clean it up and do the work. You know, you might have some sweat, you know, and decide that you can repair some of the property. So that house that you pick up for 150 might be worth 300. So the lender will lend you up to 65% of the future value, and you only have to put up 35% of your money. Now, you have 1 year to clean it up and get out. And then you could easily sell it to someone who can appreciate all the hard work that you've done, and you've made it a lovely home for them to live in.
That's wonderful. I was just sitting here thinking another way is if you do own your business, you can obtain a line of credit through your business. And there is a huge significant difference between a line of credit between your personal versus your business line of credit. You know, it's, for example, you might have A1 credit, and if you do, you might only get approved up to 5, maybe $10,000.
You mean A1 credit as you mean personally?
As a person, as a personal consumer. But if you own a business, even if you have to be used as a personal guarantor, you can actually get approved up to $50,000 or sometimes even higher. And so when you come into those types of lines of credit, what are you going to do? You don't just get a business line of credit just to pay bills or operation of your business. The whole purpose is to get that line of credit so that you can do what? Leverage the money that you receive off that, that equity line. So when that happens, you have to be very, very smart and savvy about how you're going to utilize those resources so that you can get the money back from what you borrowed, but then make a profit. And that's always called using other people's money. So in today's market, I think for a lot of our consumers, they really need to be educated on how to be savvy in this economy with purchasing real estate, even if they're not purchasing real estate for a business. Still, this is about creating generational wealth and building your legacy. So get educated and up to date as to how you can, purchase real estate in today's economy and then make it work for you. And then, progress to even bigger and better things. And in real estate, let me just say this too really quickly, and I'm sure we'll get into it more later on, but real estate is not just residential property. There's different types of real estate. You have commercial real estate, and then you also have what's called land banking. And land banking can be worth so much money depending on the strategy behind that as far as, within your portfolio. So that's why it's so important to become savvy on, real estate, how it works, what type of real estate, how you can leverage off of real estate, how you can leverage off your business. And that's kind of how the finances tie into the real property.
And I got a text from one of our viewers. So what are the business profits or revenue requirements?
That depends, because every business, you have different types of business model. And then also too, how long your business has been around. What exactly, number one thing is how many do you have customers? Do you have paying clients? I mean, that's the number one thing that any whether it's a bank or any investor wants to know. That's the number one thing. Do you have any paying customers?
Okay.
So there's a lot of requirements when it comes to business lines of credit.
It's
And-
usually about 2 years, 2 to 3 years in business and showing a profit.
Right.
Yeah.
Right. But also too, and depending on the credit.
Yeah.
And so, what about our viewers out there who are looking to refinance right now? What is your advice for them looking to refinance?
Some people do not have equity on their property, so they can go back to whoever their lender is and do what we call a rate and terms. So, like I probably need to see Tanya myself. I'm one of those consumers that my interest rate is 5.5%, which is an outstanding rate at one time. I have no equity in my house anymore, but I could go back to my lender and ask for a rate and term. I haven't been late on my mortgage. Sometimes they'll do it with one late, or sometimes they can even do, I would do rate and terms. If you have equity, that's wonderful, but mostly everyone is upside down, and so I would say go talk to your lender and ask to do a rate and term and lower your rate.
Okay, Tanya?
I do agree with that. A lot of the people that we see that I've been seeing recently, as far as the refi goes, they do have, a lot do have equity. I'm actually shocked at how many have come to me and said, well, this is what I want to do, and we put the paperwork together, and they have tons of equity. I also do see quite a few people who do not, and those are the ones those are the ones that you really wish that you could help the most. But I do suggest that anyone who does have equity right now, and you do have a mortgage, and you do have a rate that is 5% or higher, and you have decent credit, you should definitely go back to your lender.
What's considered decent credit?
If you have, I would say 658 and higher. And the lenders are kind of picky right now. If you have lates, I do suggest you do try to clean up your credit. First run your credit report to see what's on there before you decide to refinance, because you just don't want to get dinged and have to pay extra points just for something small, something minor, a medical bill that you didn't know that you had. Get those small issues resolved up front so that they don't hurt you on the back end. And once you do that, please try to refi, because these 3.5% rates, 4.2% rates will not be around.
How long do you think they're going to be around? I hope until I get my stuff together.
As soon as the economy starts picking up.
We think it is, Scarlett, we think it will be around for at least towards we feel we have another year.
Okay.
Yeah.
Another full year?
But they're going to fluctuate between 3.5% to 4%.
Okay.
Am I right, Tanya?
I've heard that it's going to be around for another year. So.
Okay. Now, we often see in other communities that families pool their resources together to buy their first piece of property or to buy land. What are some of those ways or some of those vehicles that Black people that we can do to start pooling our resources together as a community and start buying up some of this property in some of our distressed areas? Why are you looking at me like that?
I believe that we need to, let's just love each other and trust each other.
That sounds like some hateration.
It starts, but it starts with you. So, and we as good stewards, we need to have generational wealth.
Absolutely.
Not only am I doing wealth for my children, but for my children's children.
That's right.
So if I'm an obedient servant, I have to do that.
That's right.
I have to create that wealth for them. So whatever, and see what I see in other communities is that the mother and father puts down the down payment for their children. And that's what we've got to do. But treat it like a business. Okay, son, I'm going to put down $50,000 for you to buy your first house. However, I'm going to put a second after you get that house. I'm going to put a second on your house, but you've got to pay me back. And you don't have to, and always have them pay you a little something. It's helping them. It's teaching them. But it's also building wealth, generational wealth. So what I'm saying to you is that we must trust and love each other. We must start it with our immediate family and mama, daddy, sister, brother, whatever we have to do for teach one,
Each one teach one?
Yes,
Mhm.
ma'am. And we have to help each other. No one else is going to help us. Back in the old days, in the 60s, when our parents grew up, and power to the people, hey, what did they do? They reached back and brought one up. And that's what we have to do as a community, as a people. Love each other and reach back and pull one up.
I love
And
it.
that's how we're going to have generational wealth for years, because our neighborhoods are not looking like us
No, they
anymore.
are not. The
Yeah.
demographics are definitely changing.
They've
Tanya.
changed. The demographics have changed quite a bit. And in my experience in doing reverse mortgages, and I've done quite a few, I have had probably one African American do a reverse mortgage to purchase property. And I do see quite a few people that don't look like us. They will take out that money and purchase property, or they will give the money to their kids.
Excellent. Okay, we're going to take a quick commercial break. When we come back, we're going to get a little bit more into our conversation on real property, but also reverse mortgages as a vehicle for not only building wealth but creating legacies. Right here on The Dialogue. We're going to take a quick commercial break, and we'll be right back.
Love you, adore you, sister. Gotta know I'm always gonna be with you, sister. 'Cause the struggle's only gonna get bigger, sister. Think you gonna help and make me a mister, sister. With you I will be a winner, sister.
We know there are many choices in internet radio, and the staff and host of LA Talk Live would like to thank you for choosing the internet's hottest destination for the most eclectic sound and invigorating talk. This is LA Talk Live. We are more than just talk.
I get you.
Hi, I'm Starlett Quarles of The Dialogue. On November 6, 2012, we voted in record numbers. Not only did we re-elect our nation's first black president, Barack Obama, but we also let our voices be heard on so many issues that are impacting our communities across the country. However, this year in Los Angeles, we'll have another opportunity to let our voices be heard. In March, we'll elect a new mayor, and this new mayor will govern our city for at least 4 years. And he or she will help to decide on issues that will impact our communities for years to come. As the city of LA moves in a new direction, we need to make sure that the black community's concerns are not only being heard, but that actions being taken to make sure that they're being put into effect. So what do we need? What does LA's black community want? We know that there hasn't been a black agenda or succession plan put in place for this generation, but now we have the opportunity and the challenge to create one. So join me on May 11th at the LA Convention Center for a dialogue with Black LA. This event is dedicated to bringing Los Angeles' black community together to discuss how we can be a part of the new mayor's agenda for the city of Los Angeles. Let your voice be heard. Be a part of this historic movement and progressive conversation. Now, space is limited, so make sure you pre-register today to claim your seat and your voice at A Dialogue with Black LA. To pre-register, please click on the link below or visit our website at dwbla.eventbrite.com. Thank you, and I'll see you on May 11th.
Interested in advertising your business, product, or service here on The Dialogue? Call 323-547-7748. The Dialogue will help you promote your business, increase your traffic, and bring in new clients through innovative and creative marketing packages, including affordable radio ad campaigns for small businesses. Find out more. Call 323-547-7748. That's 323-547-7748. Or go to www.thedialoguela.com. And now, back to The Dialogue. The Dialogue with Starlett Quarles. Real talk, real people.
Y'all know I got my old school on, y'all. Welcome back to The Dialogue. Real talk, real people. We are talking about ownership and real property here on The Dialogue with my co-host, Shalon Douglas. of Shalon Douglas Unlimited and Turnkey the Professionals. And we're focusing all month long, or we have focused all month long, on her ownership circle model. And her final principle in her model is the ownership of real property. And we're talking about real estate and real property and reverse mortgages with our guest today, Adrienne Bates of Keller Williams Realty in Marina Del Rey, and reverse mortgage specialist Tanya Matthews of New Biz Energy. Now, during the commercial break, we were talking about this generational curse amongst African Americans, amongst Black folks, about creating wealth and pooling our resources. And Shalon, you were saying it was interesting because you brought up that concept of this generational curse.
Right. During the break, we were basically having a really nice conversation how you have generational wealth, you also have the generational curse. And one of the things for our African American community is that we have to get educated. We must thirst and hunger for the knowledge and the information in order to get up out of the big black hole that we feel that we're in. We're actually not in the hole. That's just our mindset.
Right.
That's just where we tend to keep ourselves trapped or entrapped. But, these different communities that are out there, that are the generation or the people who don't look like us, one thing that they do have is that their parents and their parents' parents and going back have educated them on the process of the importance of ownership, whether it be real property, whether it be your business, finances. And that's something that we as an African American community, we don't do, but not to put us down to say, we don't want to do it. The number one result from that is because we're not hungry enough to go out to get the education. So it's there.
And that's part of why we're doing our whole conversation on the Black agenda.
Right.
Because there is no concerted, holistic effort for us to be able to not only mobilize, but and hold our politicians politically accountable, but in terms of our economic development and our wealth and just being more, engaged and involved in the redevelopment of our communities and the economic development wealth for generations. So before we get into our conversation with Tanya on reverse mortgages, Adrienne, I want to ask you, just if you are interested in being a real estate investor and you're looking at some properties, what are 3 tips that you would tell a prospective landlord to pay attention to when trying to purchase some property?
Well, I would definitely say do your homework, meaning that always do a home inspection. You must check the very 5 key areas. That is the roof, the electrical, the plumbing, the foundation, and the heating. That's what will cost them the most money. Also check, there's so many websites that you can check about the safety of the area and just to buy and hold. And I just want to say one other thing about the generational curse. My experience, I've done a lot of probates, meaning that the mother, fathers have passed away. And what I'm seeing now is the children are disrespectful to their ancestors in regards to selling the home. I mean, so many people work so hard to own their own home. And then my son and my daughter, maybe we didn't teach them how to fish, but how dare you sell that home? That home is your foundation. That home is your wealth. So what I would say, if mom or dad passes away, try to keep the house if you can and either rent it out if you can and use that as a stepping stone where everyone will build wealth. What I see is the money goes in a year and you have nothing to show for it. A big party, a big dinner, big deal. I'd rather have a couple units that are paying my car note, paying for my trip to Europe, paying for my kids' education.
Right.
But you can use that as a platform.
I just had a viewer just text to say it's not built into our culture.
No, I object to that. No. If you know your grandmother and your mother and your father that grew up from the turn of the century till now, they taught you education and home ownership. My dad always told me, always pay for wherever you live, and preferably own your own. And that's what we need to do. So let's build it into our culture to own our own, have our own business, have our own everything, and start trading with people that look like you.
Absolutely.
Because that puts the money back into the community.
Muhammad Nasruddin died trying to get us to recycle black dollars.
Yes.
And rest in peace, Muhammad Nasruddin. So what are these, and I'm going to conclude with you with 3 misperceptions that we have as African Americans when it comes to investing in real estate? I mean, you talked a little bit about, just keeping our family legacies in terms of our family property. But what are some of the other misperceptions that we have, especially the new generation,
My
that
credit is
wasn't
bad.
taught to us?
Yeah.
Mm-hmm.
My credit is bad. We can your credit can get good in what, 6 months, Tanya?
It can.
6 months.
Thank you.
You can turn your whole life around in
Yes.
6 months.
Start, yes.
You can work your credit
Wait
out
a
in
minute,
6 months.
Scarlett. If you don't have a plan,
Mm-hmm.
you plan to fail. So if I want to own my own home or buy me a duplex or 4 units and have that unit pay for my Mercedes Benz or whatever, I got to work my plan. So dream big, be bold, write the vision. It is for a what? An anointed time. It will come. If you don't have it on paper and if you don't have a vision, then you're going to fail.
Very good.
So the credit can be cleaned up. Now, stop eating out. Save your money. Save some, spend some, like grandma used to tell you. It works. So save your money. Stop eating out. Take your lunch. Hey, do your own cleaning. Do whatever you got to do. When I was 23 years old, guess what? Every 6 months, I bought a piece of property. I saved $5,000. I saved $10,000. Bought 2 units, 3 units, 4 units, whatever. I worked my plan.
Did you teach this to your kids?
Yes, ma'am.
I love it.
And she's 25 now, getting ready to go to grad school, my baby. But I'm on a mission right now to go put her in 4 units. You hear what I'm saying?
I do.
And that way, by the time she's 30, what is she? A millionaire.
Right.
You hear? So you got to have a millionaire
And out of your
mindset.
pocketbook, right?
Well, she's out of my. Hey, she's a grown woman. She's out of my pocketbook.
Yes, you had some grandbabies.
Yeah, about 3, and they're all doing well. Thank
Excellent,
you.
excellent. So, any other misperceptions?
Okay, so my credit's not good. I don't have any money. Guess what? You can do. I bought property with no money down.
Right.
You know, it's the vision. It's the mindset. You know, hey, where's your? Forget doubt and fear. I can do everything. Okay, so your credit can be cleaned up. We can get you some money and dream big, and you will succeed.
I love it. Thank you so much. And now, Tanya, I want to get into a specific conversation with you about reverse mortgage. What are reverse mortgages and how do they work?
A reverse mortgage is designed for seniors who are over the age of 62 who have equity in their property. The great thing about reverse mortgages is that you do not have to qualify based on your credit or your income. You only need to be the youngest borrower needs to only be 62 and you need to have equity in your property. With that equity, we would pay off your mortgage, and if there is any equity left, meaning any monies left over, you are able to then take those monies and do whatever you like with those funds. So in other words, you can purchase property, you can pay off bills or debts if that's your choosing. I personally would purchase property or invest in some type of vehicle that would aid me in the future. But you can do whatever you want with it. It will make your life easier. It is creating an income stream for that home owner.
How did you end up becoming a reverse mortgage specialist? And how did you get into the game?
My father is a broker also, and he got one for my grandfather. And everybody in the family came to me and said, Tanya, what is your daddy doing? What is your father doing? Those people are gonna take granddaddy's house, and everybody kept coming to me because they thought my father was crazy. So I sat down, I did some research, I called a few companies, and then I realized that this is the only way that my grandfather was gonna stay in his home. It was the only way that myself or someone else was not going to have to support him. So we did the reverse. He did 3 actually. Each time the market changed, he pulled out additional equity. But what it did was it allowed him, again, to stay in his house. He was able to fix up his property. And he ended up being the one to support the family anytime somebody needed
So what happens if the borrower dies?
Well, if that borrower has a trust, whatever is in that trust, that's going to be done with the property. So if you have heirs and your heirs are to assume that property, then your heirs are going to either have to refinance that property or sell it. Now, with that being said, most Black people don't have trusts. We don't. So
But we have wills or we don't have anything?
we don't have anything.
Okay.
So our properties are ended up in probate, and then you have 5 people paying attorney fees, fighting for a little property that really doesn't have a lot of equity, and nobody even really wins. So getting back to what happens after someone passes away, the heirs can either refinance or sell the home. Now, one thing that we do I caution all of my borrowers, is that they have some type of vehicle in place to help with the finances or let's see, the after expenses or for their heirs, something such as a life insurance policy. So that since this is a negative equity loan, meaning you are making no payments, and since you're making no payments, your mortgage balance increases. So to offset that in case you want to leave that property to your heirs, again, I recommend a financial vehicle, something such as a insurance policy that will pay something to the heirs or pay off that property altogether.
So what's the difference between a reverse mortgage and a home equity loan?
A home equity line, that is just a line. If you have a zero balance and you have a home equity line of credit, you're able to pull from that line of credit and then you're spending it and you're making payments. If you have a reverse mortgage, you are no longer making payments. So let's see, I'm looking at a client right now. They have a mortgage balance of $187,000, and this particular person will be able to have that loan paid off. They will stop making their mortgage payments, and they will have $45,000 left in their pocket to do whatever they desire. So it's creating a cash flow. So if you're not making a payment of $1,000 per month, in a year you have $10,000.
Wow. Shalon.
I was just listening to Tanya, and again, going back to having to be savvy in the real estate market. You know, for example, I'll just take my parents. If they're interested in a reverse mortgage, then, and if they qualify and had capital left over, then most certainly would it be financial freedom for them, but then also too us coming together as a family unit and understanding and being more knowledgeable on estate planning, generational wealth, creating that legacy. Then your parents, if they're willing to do so, and most likely they will, especially if they have grandbabies involved, you know, you could take that money and you can invest into more real estate. You can invest into other things. You can invest in, and not just real estate, you can invest into land banking. The difference between land banking and real property is that land banking is considered non-structured property, but it's still property. And it's sort of like on the borderline of insurance and real estate. So you really got to be, you know, familiar or learn about land banking. But land banking is also a vehicle that you don't turn around and you don't try to flip, you know, within a short term. You can turn around. The difference between land banking, which is non-structured property, and real property is that, say, for example, you know, we always said this in the business. The creator, he made earth with land one time, right? So whatever land is being used, that's it, right? But for homes are constantly being torn down, built, torn down, rebuilt, torn down, rebuilt. So imagine yourself if 20 years ago, if you would have bought a piece of land in LA versus a piece of property where eventually over time there's property built on that land. So could you imagine the value of that land versus a piece of property? The value of that land can be anywhere between 2 point something, or let me go back. We're talking about LA. The value of the land could actually be worth around 17 million versus a piece of property at one time being worth 1 point up to 2 million, somewhere in that area. But then when the economy drops, then the value in that property drops, but not your land.
Okay.
So that's what I mean by becoming savvy when you're in this market of real estate, and how you can turn it into a system, and that can actually become your business. But then as a family, you know, depending on the reverse mortgages and coming together and kind of, let's do away with the generational curse. Let's come together. Let's get educated as a family. Let's understand the importance of ownership. And then let's leverage that ownership so that our children's children and their children's children and so on and so forth, you know, we're starting to build that empire.
Okay. Now, who is eligible for? I know you said they have to be 62 or over. Is there a special type of home, or what types of homes are eligible for reverse mortgages?
1 to 4 units.
Okay.
So as Adrienne was saying, let's say if you have a duplex, and I did one of these Monday, the gentleman has a duplex, so he's going to do a reverse mortgage, and he's still going to be able to collect rent on the other half of the unit.
Wow.
He stops his mortgage payments, but he's still able to have that income.
Okay.
That's a beautiful thing.
It is a beautiful
Isn't that a beautiful thing?
Yes.
That is a beautiful. Now, I had a question for you, Tanya. Now, how long do the kids or the heirs have to do they have to refinance or buy it out, or, you know, how do, and then the other thing is, would you strongly, being a financial person, would you strongly recommend, because I keep hearing my mother-in-law's voice in my head about I need to get, instead of having a will, that I need to have a trust. And because if I had a trust, then my children don't have to go to probate. And so there are a lot of people, financial planners and people that can do a trust. And so I'm hearing that the trust is better. They don't have to go to probate court, and it gives the estate directions as to what the decedent wants for their future.
Excellent
Yes,
question.
that is correct. With the trust, everything that you said is correct. The heirs do not go through this long, extensive probate. They'll still have to go through the court system and go before the judge. However, you eliminate a lot of battles.
Good.
You eliminate a lot of, let's say you have Johnny, who was the wild child, who hasn't been around the family, and now mom has gone home and wants to collect the property, and all the other kids are saying, "Oh no, you weren't here." You eliminate all of that.
We got them.
Yes, we do.
And can I add that you also eliminate the sharks attorneys out there who purposely want to tie up the property so that eventually you run out of money, and guess who gets the property in the end?
Okay.
Yes, that is so true. And along with that, how long do the heirs have? The heirs have up to 1 year. So the banks will start off with a 6-month period if the heirs have not determined what they want to do with the property, meaning sell or refinance. If they make no action up at the 6-month period, then the banks will take over the property. Then you have another 6 month period that is granted to you. As long as you are compliant with contacting the bank at the 6-month period prior to, and then prior to another 3rd-month period, and prior to then another 3rd-month period, equaling a total of 12 months, you are, as an heir, able to either refinance that property if you're able, or sell it.
Now, what is how much money can you get from your home? Is there a limit?
Well, with FHA, since this is a loan that is insured by FHA, we go through their principles. So we're using the FHA standards of $650,000 as far as the maximum home value. And if your home is worth $650,000 or $625,000, and let's assume you're about 70, you could walk away with about close to $400,000.
Is that right?
Yes. The gentleman that I saw on
Let me see what my parents are doing.
Let's go buy an 88 unit
Right.
building and we can live large.
and
400,000, we could buy 12
You
units,
know what I'm
20
about?
units,
You
and
talk
have
about-
multiple streams of income.
Right, we pulling our resources. We recycling by dollars up in here.
right. And it's also dependent upon your age. So, and I have to refer back to the gentleman that I saw on Monday. He's 63, and he would be receiving $232,000.
Wow.
Does he know what he wants to do with that?
Well, he has to pay off his mortgage. If he had no mortgage, he could do whatever he want. I mean,
Wow.
just imagine how many units you can go. You can go to Arizona and pick up how many
Yeah.
condos.
Oh my God.
Yeah.
And rent them all out.
Yeah. Yeah.
Oh Lord.
I also-
Is he healthy? I'm just kidding. Starlett. I'm sorry, Shalon. Go ahead.
This is another element that we talked about during the break too that I wanted to add, that a lot of people think that sitting on the equity is the best thing to do, and I just wanted to make sure I stress that on this show is that if you have any equity in your property, please run to the bank and hurry up and take that equity out of the property. But at the same time, become educated on how you can leverage that equity too. Don't just take it out just to take it out.
Yeah, because I was going to ask, how do you structure your reverse mortgage to take out the money and maybe put it into a business?
It's just really simple. That's just what the loan is designed for. If you have a lien against your property, your mortgage, you pay off your mortgage, and then the bank will just give you the money. And just plain and simple, you do.
Well, do you recommend businesses for them, or for people who you've done this for? Do they already know what they want to do, or do you suggest some opportunities for them to put their money into?
I always tell them to be wise and to talk to a financial planner, because legally I'm not supposed to give any advice, but I do tell them to make decisions that will enhance their lives. And I do throw out scenarios such as you can start a business, you can purchase property. These are some of the things that I always tell them.
I just want to add to that, Starlet, that you'll be surprised as to how many senior citizens are looking to or want to start their business.
Excellent.
Especially in today's economy. You cannot live off of Social Security alone. I think the max of that is like $1,200 and a few odd dollars, a little bit higher than that.
No, I think it's maybe about what, $2,000, maybe.
Oh, they raise it.
Maybe 18 to
Uh-huh.
2,200.
But that's still not
Nothing.
enough to live
No.
in today's economy. So I was very surprised at how I was approached one time to start a program for senior citizens, and I didn't want to be disrespectful. I'm thinking they really want to start their,
They really do.
but they really, really do. And so, especially too, if you can, it's again going back to the mindset. So if you can talk to them about how to structure leveraging that income and creating generational wealth, because a lot of times it's just because behind of what you don't know.
Right.
I always tell people that money is not financial freedom.
No.
It's the knowledge behind money that's the financial freedom. Once you know and understand how money works and respect money, the money will respect you.
That's right.
So-
That's
I
right.
had no idea that this is such an excellent conversation. I had all these questions that be coming down to the wire. But I want to ask you, what are the drawbacks, if any? What are some of the drawbacks to a reverse mortgage?
The largest drawback is the fact that you're depleting your equities because you're not making a mortgage payment. So the more money that you take out up front, that means that's the more money your house is going to be depleted in equity. So if you're taking out $400,000 up front, now you have a $400,000 lien, and that $400,000 lien is going to increase in the balance every year.
So what are the tax implications for that, tax liabilities?
You are not penalized for taking out any of the cash. However, if you were paying a mortgage and you were receiving that statement at the end of the year that allows you to write off your interest, you're no longer going to have that statement.
Okay.
Wow.
So we were coming to the final 4 minutes of the show. My God, this was such an excellent topic. So what advice would you give someone who was interested in being an investor, who wants to find out some more information about reverse mortgages? What would you tell them, Adrian?
The first thing I would say, hire a realtor, of course, someone that will protect you and make sure that, everything is done right. And the second thing I would say, dream your dream, and dream big. And let's work your plan, because in 5 years, I've seen a lot of young people that have worked their plan, and in 5 years, they own 200 units. So, dream big, have your vision, hire a realtor, and just do it. Let's get out and do it.
And how can people find you?
Oh, easy. My email is adrian@adrianbates.com. It's ADRIAN@adrianbates.com, or my number is 323-291-5900, and we're always here to help.
Excellent. Thank you. And reverse mortgages.
Yes, do a little research online, but don't do too much, because you'll point and click, and then someone will guide you to their website and not to me.
Absolutely.
So I can be reached at Tanya M. That's TONYAM at New Biz Energy, and that's NEWBIZENERGY.com. And my telephone number, I will take phone calls, is area code 951-201-6591.
Thank you. And Shalon, I'm going to miss you. I love you, but I'm going to see you off the air.
Oh, yeah.
But, give us your final words on your ownership circle model.
Yes.
And how people can find you and get more involved in what you're doing.
I would just like to end and wrap this show up by saying that become educated. Get educated on ownership, period. Get educated within the 4 dimensions. That's the whole purpose of the ownership circle model. And one of the things is learn all that you can behind the knowledge of money. I mean, money goes in so many different ways. So learn what all those different options and how you can leverage those options. Most importantly, if you want to receive more knowledge and education, come see me. Come talk to me. I have a whole lot more to give.
Way more.
There's, you can find me at ShalonDouglasUnlimited.com, and that's SHELON Douglas with one S, unlimited.com. And when you get there, you'll see more of the opportunities that we have available for individuals. We've created programs, we have technology tools, we have products, we have services. We're basically that incubator for business owners to come and receive all this knowledge, that just the little bits and tits. And we have so many more resources and connections. If you've been following us at all throughout the whole series of the show, we have many more resources for you and available. So thank you so much, Starlett, for having us.
Of course. And before I
on
go,
the
I
show.
got my little guy baby here, Alexis, who's here on spring break. Any advice for our kids and how we can start, changing the mindset of our kids and teaching them about intergenerational wealth and saving? She's always says, I'm saving my money.
That's
But,
right.
what can we teach our
I would
babies?
definitely teach them how to save, teach them about money, have them help you pay your bills online, put them in Quicken. Teach them how to pay your bills and see where the money goes, because we must teach them about the money. Read Think and Grow Rich, Richest Man of Babylon, Rich Kid.
Rich Dad, Poor Dad, changed my life.
Thank you. Mine too. Excellent. Millionaire Mind,
Adrian, last words for our babies? I'm sorry, Tanya.
Teach them how to balance their checkbook, and they must know that if you're pulling money out of your account with an ATM, you need to balance your.
If I remember anything else, I remember how to balance my checkbook to zero because my father taught me how to do that. Thank you, ladies, so much.
you.
Miss
Thank
Adrian,
you.
Tanya,
Thank you.
Shalana, I absolutely love you and adore you.
Thank
Thank you so much for being with me all month long.
Thank you.
This is Starlett Quarles. Join us next month. We're going to the Black Agenda Part 2 in anticipation of the 2013 mayoral election here in Los Angeles. Signing off as my mama's child and my daddy's baby girl. Until next week.